From Bloomberg World Headquarters in New York to our TV and radio audiences worldwide, welcome to Balance of Power, where the world of politics meets the world of business. I'm David Weston. We're going to start with Abigail Doolittle and a report on the markets. And I must say, Abigail, it looks like nobody wants to go anywhere, anyplace, time fast.
I would agree with you on that, David. Not a lot happening for markets on this day. We have relatively small declines for the major averages after the gains that we had yesterday. So right there, lots of uncertainty waffling after last week's down week. In fact, 2 weeks in a row down for the NASDAQ. So maybe a bearish tilt to all of this. But what investors are waiting for, so many different factors. Of course, tomorrow we have those big tech hearings. We also have the Fed and earnings over today, tomorrow, and Thursday. Each day, 10% of the S&P 500 companies are reporting. And of course, on Thursday, it's Apple, Amazon, Alphabet, and Facebook. About 40% of the NASDAQ 100 is waiting. So investors are really in wait-and-see mode, wanting to know what is next relative to all of these factors, plus stimulus out of D.C. And we also have, at this point, gold going back higher. And this, of course, as the dollar is lower. So some of the trends that we've seen more in place recently are still in place today, David, again, as investors are waiting.
I think we're also going to get some Q2 GDP numbers if we didn't have enough already. But I was going to ask you about gold because it was such a big story yesterday. But I have to tie it also into the dollar. What's the dollar doing?
So the dollar is down. Well, the Bloomberg dollar index, I should say, is down about 0.4%. The DXY, or the dollar index itself, is about flat. The difference is in the euro weighting. But the trend right now on the dollar has been down, but so much so that we have Goldman Sachs out today saying that perhaps it's going to lose its status as the reserve currency. In the past, when I've seen notes like this, David, sometimes it's a signal that there could actually be some stabilization or a move to the higher. That's supported by the technicals. And of course, relative to the Fed tomorrow, will they give any policy moves? Very, very unlikely. And of course, today they did extend their emergency loans. So that's probably the bigger news. The 10-year yield at this point has basically been flatlining since March. If anything, it appears as though its bias may be to the upside. That could potentially support the dollar. Stay tuned. There's probably going to be some interesting information to come out of the Fed, or at least how investors interpret it relative to the dollar. Perhaps the bias, again, for the dollar, David, flat to higher.
Okay, thank you so much, Abigail Doolittle, for that report on the markets. Well, the Republicans did make their fiscal proposals yesterday. Democrats didn't take long to say it was a day late and a dollar short. And so we begin the negotiations. We welcome now our Bloomberg Washington Bureau Chief. He is Craig Gordon. Craig, thanks so much for joining us today. It does seem like there's a fair distance between the Democrats and their so-called HEROES Act on the one hand, $3.5 trillion, and $1 trillion on the Republican side?
Yeah, even in Washington, that's a lot of trillions to be separated from. So, and look, it's not just the dollar signs. We know these are negotiating positions. You know, Republicans go low, Democrats go high. It's on almost every major issue inside this bill they disagree about. Democrats would keep the $600 unemployment checks going. Republicans want to cut that back to a sort of a 70% income replacement model that the Democrats do not like. Democrats want state and local funding to help them with sort of the COVID budget problems. Republicans are adamantly opposed to that. Republicans want a liability shield for companies as they welcome their workers back from the virus. So work from home. Democrats are very opposed to that. So there's a lot of very deeply held sort of philosophical beliefs on both sides. The role of government in business that are really keeping these two sides far, far apart.
Craig, there's a real deadline involved here, as I understand it, on those supplemental unemployment benefits, insurance benefits. Can Nancy Pelosi afford to let it go to zero, which was what would happen if nothing happens, right?
Yeah, I mean, this is really the question right now. We are definitely in a very classic sort of Washington game of chicken, and two cars are speeding toward each other, and who's going to veer off first. I think Democrats feel like they have the upper hand. They may be right, they may be wrong, but their belief is, Mitch McConnell didn't even put out his bill until yesterday, so that they can sort of point to the Republicans and say, look, they knew this July 31st deadline you're referring to when these unemployment benefits run out was coming, and they basically stalled and dragged their feet, and now here we are, sort of a manufactured crisis. Now, if you're a Democrat House member in a Trump sort of district running for re-election in the fall, you might be a little bit nervous that a lot of those people in that district who are getting this very nice $600 a week, unemployment sort of benefit, that goes to zero, as you say. So I think there's going to be a lot of blame to go around. Right now, Democrats think they have the upper hand. We'll see how it plays out.
What about state and local aid? As I understand it, the Republicans really are saying we'll give some money to the schools, but I'm not sure there's much more. The Democrats, weren't they asking for $1 trillion for the state and local governments?
Give or take, yeah. I mean, and again, here you really do get down to very, it's funny because covering Washington, I've been down here for 20 years, and a lot of this stuff is pure politics. But there are underneath, undergirding each party are some beliefs. The Republicans would say state and local officials, mayors in some of these cities, obviously many of them heavily Democratic, mismanage their budgets. Their pensions are too high. They pay their cops too much. Whatever it might be, why should we reward bad behavior? Democrats would say, state and local government is kind of the backbone of the country. We need to do what we can to help them out in a time when everybody's budget's been kind of turned upside down by the virus. So you have a very deep philosophical difference of opinion about that. But yeah, Republicans as of now have exactly $0 in their plan for kind of, propping up state and local budgets. They are throwing a little bit toward the schools, a huge point of disagreement between the two parties.
Politics informs so much of what happens in Washington, but we've got politics with a real point to it with the November election coming up here. Typically, I would think spending more money will be more popular. What is the Republican political strategy here if, in fact, they come in lower than the Democrats?
Yeah, I mean, it's actually interesting because we've had a bit of a sighting of a kind of an endangered species in Washington, and that's the Republican fiscal hawk. Donald Trump has done more to increase the deficit than certainly any president in the years I've been here. Most Republicans have very gleefully gone along with that. Tax cuts tilted a little bit toward corporations and the wealthy. No one complained too much, but I do think you're starting to hear from people like Ted Cruz, John Kennedy down in Louisiana, some Rand Paul, some of the very pretty stridently conservative folks who are saying we've already put $4 trillion more onto the deficit because all the prior stimulus spending is pure deficit spending. There's no taxes to pay for that. There's just pure deficit spending in a time of national crisis. Do we really need another trillion, maybe $2 trillion? And I think Republicans are worried they have to go back and face their voters and say, look, we were trying to be responsible stewards of the federal budget, at least in this last minute, sort of change of heart. I agree. That's a tough sell. Like you might want to be going back and saying, we got your unemployment benefit. We helped the state and local. We got some money for the schools, some money for testing. Republicans, there's a very big chunk, and it's probably 20, 30 senators that do not want to do another $1 trillion bill, and they could stop it. They could slow it down quite a lot.
Wow. Okay. Thank you so much, Craig. That is Craig Gordon. He's our Washington bureau chief. In the meantime, here we're going to be talking about both that fiscal stimulus as well as U.S.-China relations with Max Baucus, former ambassador to China and former chair of the Senate Finance Committee. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. It is time now for Bloomberg First Word News, and for that we turn to Mark Crumpton.
David, thank you. On Capitol Hill, Attorney General William Barr is defending himself before House Democrats who say he's politicized the Justice Department to give in to President Trump's wishes. Barr told the House Judiciary Committee that Mr. Trump has not tried to interfere with his work. Barr said the president expects him to exercise, quote, independent judgment to make whatever decisions he believes are right. The Federal Reserve is extending most of its emergency lending programs for 3 months through the rest of 2020. The programs were open to pump liquidity into short-term credit markets and extend credit to businesses and local governments hit hard by the coronavirus pandemic. The facilities have the potential to deploy trillions of dollars, but so far have only about $100 billion in outstanding loans. The number of one-day deaths from coronavirus has reached a new record in the state of Florida. Florida just reported another 186 fatalities. Overall cases are up 2.1%. That's below the previous 7-day average. Florida's daily positivity rate has ticked up a bit from yesterday to 11.7%. The British Prime Minister Boris Johnson is defending his decision to extend the country's travel ban to Spain. The Prime Minister says it's the government's duty to protect the UK from a second coronavirus spike. The decision to toughen the travel advice for Spain has prompted widespread dismay among some in the UK. Spain is traditionally the most popular summer holiday destination for Britons. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. David?
Thanks so much, Mark. Tensions continue between the United States and China, and they're not that much better between Democrats and Republicans over this so-called fourth round of fiscal stimulus. Welcome now somebody who's a veteran of both of those kinds of tensions. Max Baucus served as U.S. ambassador to China, and before that for 36 years in the U.S. Senate as senator from Montana. Part of that was as the chair of the Finance Committee. So welcome, Mr. Ambassador. Great to have you. Let's start with you as Mr. Chairman of the Finance Committee. We now have the proposal at long last from the Republicans, and it's a gap of between $1 trillion and $3.5 trillion. That's a big gap. Can they overcome that?
They will, because they have to. But there's tension, obviously, not only between Democrats and Republicans, $3 trillion bill versus a $1 trillion bill, but there's also a lot of tension within the Republican Party, between the liberals and the conservatives. And that's partly because we're running up such an increase in our national debt, and that's making it a little hard to reach a compromise between, Speaker Pelosi and Mitch McConnell in the White House. They'll get it done. They'll get it done because they have to. The country's in dire shape, and, they'll find a way.
So you not only were a major leader in the United States Senate, you also ran for office quite a few times successfully. We do have an election coming in November. How can someone afford to leave it short when it comes to the stimulus for the economy, given how many people are unemployed, given how many people are about to lose their houses, perhaps, because they can't pay the rent?
Well, they can't. The first rule of almost every member of Congress is to get reelected. And to get reelected, you do what the people back home want you to do. The people back home are frightened. They're scared. Either they're sick or they're afraid of getting sick. They've lost their jobs. They're subject to stay-at-home orders. It's very, very worrisome for a lot of people, obviously, in the country. And members of Congress, they know that, especially those in the Senate up for reelection this term. They especially know it, as do, obviously, all members of the House. So I don't see any reason for a delay. They'll get it. They'll find it'll be somewhere compromised between $1 and $3 trillion, maybe 1.75, something like that. It'll get done.
What do you make of all the polls right now? And we still have over 90 days left to election, which is, you would know better than I, is an eternity in political terms. At the same time, they seem to be really turning a bit on President Trump, including in battleground states as well as nationwide. Do you put much stock in them at this point?
I do. It's no candidate has been this far ahead, close up to the election and lost. They always win. Always have in recent American history. Although these times are very, very different, and Donald Trump makes things very different. He's not the traditional candidate. I mean, he says things which are suspect. He changes his mind. He's very inflammatory. He tweets all the time. He knows how to get a lot of media attention, and some people like that. He's also playing to a lot of people who feel they're not being listened to, the disinfected, the unaffected, those who just feel that Washington's not paying enough attention to them. Nevertheless, there's a feel that there may be a wave election here, that Biden may win by quite a large margin, that potentially the Senate will flip to a Democratic majority control. There's the underlying feeling right now. That could change. I see Trump trying a little law and order to try to get things turned around his direction. He may announce, he's found, or the U.S. has found a vaccine to address the virus just before the election. The economy might turn a little better. But even so, I think the polls are not too far from probably where this is going to end up. It'll narrow. It'll tighten. But I do think that Trump's having some real deep problems right now.
Ambassador Baucus, you're also a student of China, having served over there as U.S. ambassador for some time. Give us a sense of where you think China is right now, economically, as well as in combating the coronavirus. Are they essentially ahead of us?
They're doing pretty well. It's kind of interesting. We, in America, if you combine federal easing, Federal Reserve easing, quantitative easing, along with appropriations that Congress has passed, it's close to $6-7 trillion. Contrast that with China. China has spent much less to prop up its economy because it really has not had to. It's spending a lot less to prop up its economy now compared with what it did in 2008 in the financial crisis. They're doing okay. Consumer spending is up. I think partly it's because they've controlled the virus much better than have we. There's confidence there in China. Now, of course, their GDP is down about 2% a year. That's much lower than it has been in the past, but it's positive. Contrast that with our economy because we're negative. So they're doing okay. They work very hard. They're very practical, very pragmatic, and they're very proud.
Well, President Trump certainly has been very critical of President Xi and the regime in recent days, including closing that consulate down in Houston. How much of that is really U.S.-China policy, and how much of it is politics looking forward to November?
I think a good bit of it's politics. We're kind of in the silly season. However, there are some in the Trump administration who very much would like to use China as a foil to help regain what they regard as insufficient American prominence in the world. That is, they're almost advocating regime change in China, and that's huge. It's almost advocating overthrowing Xi Jinping. So I think a lot of what you're seeing from Secretary Pompeo, from FBI Director Wray, from Bill Barr, National Security Advisor Sullivan, is really based on trying to reset the relationship in a very hawkish way, not in an accommodative way, but in a very hawkish way, so that even if Biden wins, the U.S. will be very, very critical and very adversarial in its relations with China. That's going on as well.
Ambassador Baucus, is this causing any consternation or hesitation in Beijing? Because they have problems also with India, with that border clash. They've got a number of challenges around them as well. Is there any sense that they may be thinking maybe we pushed this too hard, too fast?
Well, they're reacting, the Chinese. Strong U.S. actions, like closing the Houston consulate and some of the sanctions we imposed against Chinese officials because of Hong Kong, are really making it difficult for the reformers in China to press their case. Rather, it's causing the hawks in China to advance their case. And and basically it's because of all these public statements back and forth that always causes hardening, on both sides. China's got a very tough course ahead of it. It has to, on the one hand, not be too reactive against the United States because it wants to maintain a relationship with the United States. Their economy so much depends on a strong trade and investment between our two countries. And frankly, his reactions to some of America's statements have been pretty measured. They could be stronger, but they're pretty measured. And he's doing that because he wants to keep a good relationship with our country. They're still buying a lot of products under the Phase 1 deal. But on the other hand, he's got hawks in his country to worry about who are kind of angry with what the United States is saying. They're pushing him to be more conservative, too. So it's a tough road to hoe.
So finally, Ambassador Baucus, give us a sense of what a Biden approach to China would be. I mean, we have a long way to go to the election, as I say, and we only have one president at a time, so I don't want to get ahead of ourselves, but at least it's a possibility now that Joe Biden could be the next president. How would he approach China differently?
I think Joe Biden would engage more in fair but firm, quiet diplomacy. That is, he would speak privately to President Xi and say, you can't do that. We're not going to go along with what you're doing, and back it up with actions. Rather than being public, he won't use his Twitter accounts like Trump does. And quiet diplomacy, firm and tough and strong, tends to be more effective than all this name-calling back and forth. He also will work with our allies much better. Donald Trump hasn't done that. And in my experience, to help encourage China to work with us, we have to work with our allies. Otherwise, China will divide and conquer. They'll pick one country off against another. So those are two main differences.
Okay, thank you so much for being with us today. That's Max Baucus. He's former U.S. ambassador to China under President Obama. Still ahead here, Larry Summers on fiscal stimulus and an accommodating Fed. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. It's time now for the stock of the hour. It is 3M. Remember, it got a lot of attention for making those N95 masks that protect against COVID-19, but apparently it wasn't good enough to make up for a slowdown in the second quarter. Scarlett Fu, our senior markets editor, is here with more. Scarlett?
That's right, David. There's a gap between perception and reality. As you mentioned, 3M makes those N95 masks and also respirators. There was this perception that 3M should have been a huge beneficiary, a stellar performer even with those opportunities. However, the bottom line is that it gave a double miss, missing on the top line and the bottom line. And that's only a slice of its healthcare business overall. You look at second quarter adjusted revenue dropping 12% across geographies. You can see that healthcare held up the best, but still down 0.4% as hospitals performed fewer elective surgeries. The industrial parts of its businesses were the biggest laggards. Transportation electronics makes those glare filters for your computer screens. And on the safety and industrial side, they make foam fabricators. And both of those divisions make up 60% of the top line. Overall, you look at the encouraging news that's coming out of 3M. It is seeing some improvement in July. So the CEO, Mike Roman, did say that third quarter operating margin would rise to 21% from below 20% in the second quarter, David.
So, Scarlett, as you say, in the end, it's not a healthcare company, it's an industrial company. How's it comparing with the other industrial companies? Is it basically doing the way the others do, or is it actually lagging behind other industrials?
Well, it's lagging behind like the other industrial companies. It's valued like one as well. It trades at about 18 times earnings, less than the Dow's 20 times, certainly less than the S&P 500's 23 multiple or the NASDAQ 100's 33 multiple. I was showing you earlier the track record post-earnings. That really kind of tells the story. Using the surprise function on the Bloomberg, including today, 3M has gained only once after its last 6 earnings reports. It is the worst performer in the Dow today. The thing, David, I want to point out is that there's a lot of nuance in 3M's earnings report. The outlook for improving margins, an increase in adjusted cash flow. But when it's the busiest day of earnings season so far, and we all know that the story for earnings season has been disappointing economy and weak demand, investors aren't necessarily in the mood to reward nuance or to even consider nuance. The earnings report just becomes kind of a scorecard on whether you won or you lost in the quarter. And here I think the verdict is in.
Yeah, and the relatively new CEO, Mike Roman, has missed more than one earnings. Typically, a CEO will take this sort of occasion to say, here's a sweeping new plan, cut things, lay people off something. Is there any new plan, or is it basically just we think it's going to get better?
Well, when the economy improves, it will get better. Certainly, he is putting a lot of emphasis, Mike Roman, the CEO, on streamlining and cost cutting. But cost cutting is not an exciting story for investors, right? You can't cost cut your way to growth. The growth has to come from the underlying economy. So that's where 3M is left to kind of rely on how things go in the macro sense.
You know, like so many of us. Thank you so much to Scarlett Fu. Coming up next, we're going to ask what the U.S. economy needs from Congress of Larry Summers, former Treasury Secretary and now at Harvard. This is Balance of Power on Bloomberg Television and Radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. It's time now for First Word News, and for that we go to Mark Crumpton.
David, thank you. America's top infectious disease expert says he is cautiously optimistic that the world will have answers about a coronavirus vaccine by late fall. Dr. Anthony Fauci also told ABC's Good Morning America he agrees with the Food and Drug Administration's guidance that hydroxychloroquine is not effective against the virus. Overnight, President Trump retweeted a series of tweets advocating for the drug. 2 of the president's re-election committees are being accused of violating campaign finance laws by hiding information about nearly $170 million in payments. The Campaign Legal Center, a watchdog group, says the money included salaries paid to Lara Trump, who was married to the president's son Eric, and Kimberly Guilfoyle, who was dating Donald Trump Jr. Iran has fired a missile from a helicopter targeting a replica aircraft carrier in the strategic Strait of Hormuz. That's according to Iranian state television. The exercise is the latest move in growing tensions between Tehran and Washington. A naval spokesperson says the U.S. isn't seeking conflict, but is ready to defend American forces and interests from maritime threats in the region. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. David?
Thanks so much, Mark. The deadline for expiration of that supplemental unemployment insurance lapses this week, and it doesn't look right now like Congress is going to come to an agreement on what to do next. Welcome now Larry Summers of Harvard. He's former Secretary of the Treasury and special contributor to Wall Street Week. Larry, welcome back. Great to have you here. Put aside for the moment the huge difference between $1 trillion on the Republican side and $3.5 on the Democratic side. As you look at the U.S. economy right now, what sort of fiscal stimulus do we still need?
More and more for quite a while. We need fiscal stimulus that includes health investments, so we eventually do the testing that's going to be necessary. We need to support state and local governments who are at huge risk of exacerbating the downturn by laying off people in education and healthcare, just when basic services, just when those things have never been more important. We need to take advantage of this moment of epically low interest rates and super high unemployment to better maintain and reinvest in the infrastructure of our country. We need to make investments in continuing to support American households and American small businesses through what we have gone through. Look, we have been on a bit of a stimulus high in terms of consumer spending. And if we try to go off it cold turkey, the withdrawal symptoms for the economy are going to be something terrible. It would be a huge mistake. We need a protracted fiscal infusion into the economy that tapers off fairly gradually, measured with the progress in health conditions enabling people to come to work. We need a much more sophisticated debate and discussion than the one we're having.
Larry, why do we need more? Not more than we've had in the past, but more than other people need. I mean, we now have an historic 750 billion euro fiscal stimulus package. That's still far less than what was done here. And look, if you look at China, it's quite stunning, I think, in some ways, how little stimulus they put in, and yet their economy seems to be doing better. As Europe seems to be coming back faster than we do, why are we lagging?
We're lagging in part because we haven't done what we needed to do on the healthcare side. And we've still got to compensate for a ton of fear. We've still got to compensate for a ton of lost income. We've still got to compensate for a ton of business uncertainty. That's one part of it. Second, those countries, particularly in Europe, because they have a different system than we do, they have more of what economists call automatic stabilizers. Whenever the economy goes down, automatically transfers go up. We don't have as much of that because we don't have as much social insurance, and therefore we've got to do it with discretionary policies, what they have built in automatically to their budgets. And third, they never got as much of a stimulus high, and so they don't have the same kind of withdrawal symptoms risk that we do in terms of near-term growth rates. Those would be the considerations that seem most important to me.
Right.
But look, I think this is ultimately not a complicated calculus because policy is about risk avoidance. If we spend too much, maybe the inflation rate will creep from 1.5 to 2%, which after all is the Fed's objective. Maybe we'll have a little more debt because we borrowed at an interest rate that was way below 1% on average. If we spend too little, maybe the economy tips into a W pattern and we have another recession that gets people long-term out of work to the point where it's hard for them to come back, that causes corporations to cut their R&D budgets, their investments in the future, that reduces the level of capital formation. You know, if you look, the cohorts of kids who came out of college and came out of high school in 1982 when we had a serious recession, in 1991 when we had a serious recession, in 2001 when we had a recession, in 2009 when we had a serious recession, all of them were worse off a decade or more later. And so avoiding another downturn has to be the right policy. Maybe we'll take out a little more insurance than we need. But, you know, I feel good about having bought my life insurance last year, even though I survived. So being more stimulative is insurance against what we need to be most worried about.
Larry, this is all on the fiscal side. Let's move over to the monetary side. By all appearances, the Fed is going to keep us close to that zero bound for a long time to come. They don't seem any indication that they would move off of that. And we need to do that. I think most people agree we need that loose monetary policy right now. But are we doing longer-term damage, structural damage, damage to the fabric of the economy by having money be so cheap?
I'm not worried so much about zero rates, though in general, I'd rather see more of the stimulus come from the fiscal side than from the monetary side. I am more worried about the Fed's intervention in specific markets. It's one thing for the Fed to stop a financial panic by stepping into bond markets, as it did 2 or 3 months ago. It's another thing for the Fed to be involved in ongoing support of corporations in order just to reduce their borrowing costs. And I worry that when the Fed is a central factor driving the allocation of capital, that capital may not be allocated so well. And I have a bias, and obviously this is too simple a way to say it, but I have a bias that equity capital is more of what the economy needs than debt capital, that some of our problems come from the fact that we're long-term over-leveraged as an economy for a variety of reasons, including the deductibility of interest, and that the Fed can only do debt and that it can't do equity. And so relying on the Fed as the instrument, I think, is fairly problematic.
You mentioned earlier productivity, because ultimately in the long run, it's not just survival. We'd like the economy to grow, genuinely grow. As I understand it from economists like you, it's got to be either increased productivity or increased workforce. What can we do, if anything, to make sure that capital is being allocated to ensure greater productivity? Because right now we're stalled on productivity.
So a lot of that comes back to supporting innovation and supporting research and development, and it comes back to the education of our workforce, and it comes back to issues around STEM education and the like, because at root, productivity is heavily about technology, the ability to comprehend it, and the ability to apply it. But another part is this distinction that I was drawing between equity and debt capital, David. It's equity capital that funds the next Google or the next Amazon, and it's debt capital that funds the next repurchase of shares and flipping of a company from one private equity company to another private equity company. And I think we can all agree which one we need more of. So in general, I'd like to see us find ways of putting more emphasis on equity and less emphasis on leveraging. And I think those financial changes would, over time, make a contribution to a healthier economy.
Larry, it's always a great privilege to have you with us. Thank you so much. That's Larry Summers of Harvard, and he is, I say, proud to say, a special contributor to Wall Street Week every week. Coming up, how to run a big company with integrity and why you should do that. We talk with the former general counsel of Airbnb. He's Rob Chesnut. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Rob Chesnut has spent pretty much his entire career trying to keep people on the straight and narrow. First as a federal prosecutor, then as one of the earlier lawyers at eBay, and then as general counsel and chief ethics officer at Airbnb. Now he's written a book on what he has learned. It's called Intentional Integrity, offering some real-life lessons and some specific proposals about how to run a big company with, as he calls it, intentional integrity. Welcome now, Rob, to the program. Rob, congratulations on getting the book done. That's a feat right in and of itself. But let me start with the most basic question. Why did you pick this line of work? And why did you write this book, for that matter?
Well, I think that the world really needs a focus on integrity right now, David. Companies need to step up and solve some of the world's biggest problems. I think a lot of us are worried about government's ability due to a lot of fractious politics. Companies can play a huge role in solving some of the big issues in the world, like climate change and the like. But trust is holding people back. People have lost trust in all of our institutions, and the best way to build trust is through demonstrating integrity.
So give us a sense from the corporate point of view. I mean, everybody's going to agree integrity is nice to have. We feel better about people with integrity. Why is it necessary to have for a profit-making institution like a large corporation?
Right. Well, integrity actually drives your business. I think in the old days, people thought, business is this dog-eat-dog world, and nice guys finish last. The data actually doesn't back that up. The data demonstrates that companies with a purpose, and by purpose, I mean something that's not just profit. I mean a real purpose that to do something that is good for the world. Companies with a purpose are actually outperforming the market, and they're outperforming their competitors. So if you want to have a successful business, you've got to demonstrate that you've got something that the world really can resonate with in their hearts, something that employees are truly inspired by, and something that customers like. We are in an age of conscious consumerism, where consumers, if they don't like the values of a particular company, they're going to take their money and they're going to move it somewhere else. So part of this, David, is you need integrity in order to run a successful business. And that's just on top of the idea that integrity is something that the world needs, and it's something that we should all aspire to do right.
So, Rob, throughout your book, you intersperse it with real-life examples. Maybe they're a composite of various things, but everything happened, as I understand it, happened in real life. And it covers the things you would expect it to, things like romantic relationships within the office place, things like accepting gifts. But then, after you got the book done, we had COVID-19 come up, and you've got a postscript there where you say, well, let's apply this now to a crisis, because integrity sometimes is a little easier when things are going well. When you got a real crisis, what does that bring out when it comes to integrity?
I think a crisis actually brings out the character of a company. That's where it's really demonstrated. When people are fearful, and boy, there's a lot of fear in a crisis like this, particularly employees that are worried about losing their jobs and businesses that are afraid to go under. Acts of integrity have a long-standing impact. People are going to remember acts of integrity, any act of kindness toward others, anything that you do for others in a time like this that you can do will build trust in ways that you can't build during ordinary business times. So I think leadership really needs to step up during times like this. I was talking to somebody at dinner the other night that said they hadn't heard from their CEO since the crisis began. They were just, the managers were just communicating. This is a time where CEOs have got to get upfront and visible, both with their employees, but also with all the stakeholders involved, because stakeholders are all looking at each other. They need each other's help right now. So now's the time for leadership to step up in a crisis.
So let's apply this to a specific real-life instance right now. Airbnb is in the travel and hospitality sector, which has been just really decimated by this COVID-19 and the shutdown that happened. You've had to lay off a lot of people. How do you bring integrity to that laying off process? Because the fact is, any of us who've managed a big organization knows at some point you have to make some tough decisions.
You do, and you can have a layoff, I think, with integrity. Layoffs sometimes are an unfortunate necessity when you're in a crisis like this to keep the business actually operating and to make sure that everybody's still got jobs. But I think you start in a situation like this by being honest with people right from the beginning. Take Brian Chesky, the founder at Airbnb. From the very beginning, Brian never said, don't worry, we're all in this together. It's all going to be fine. Because I think he recognized that this was going to have a tremendous impact on the business, and that we might not all be in it together in a circumstance like this. And I think people appreciate the fact that there's honesty, and that there's a look. We're not sure what's going to happen. We may need to take steps, and we're going to let you know as soon as we get it figured out what's necessary. I think that's number one. Honest communication up front. Number two, leaders have to sacrifice first. I love Simon Sinek's book where he talks about how leaders eat last, which comes from that military notion of someone letting their troops get in line first and get their food. Well, leaders have to sacrifice first. I've read several instances where companies are handing out big bonuses to their executive team at the same time they're doing layoffs, and that's just horrible. In Airbnb's case, for example, the early first step is leadership sacrifice first. Everybody, right from the CEO on down, takes a significant pay cut, if not take no pay at all. Number three, when you do need to make the layoff, do it with empathy and do it with a communication that lets everyone know how much you appreciate what they've done. And you can do a lot of little things. In a layoff, one thing that Airbnb did was recognize that, why do we need your laptops?
Right.
We have 2,000 people who are going to be let go.
Right.
They may need those laptops when they're searching for a job. So let them keep the laptops.
It's terrific. Thank you so much, Rob. It's a really great book. I recommend to everyone. It's Rob Chesnut. He's the author of Intentional Integrity. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David West, and the heads of the four largest tech companies are going to appear before Congress tomorrow to be grilled on whether their activities, and particularly their size, is inherently anti-competitive. We talked with Wall Street Week contributor Sam Palmisano, former head of IBM, and I asked him whether bigness when it comes to tech necessarily means anti-competition.
I really don't believe so. I mean, if you go through how the Justice Department, at least in the United States, would view antitrust or anti-competitive, it's based upon impact to the consumer, or to the buyer, versus the competitor, like it is in Europe, as you know, David. The European model is different than the U.S. model. And if you look at most of their business models, the services they provide are basically free or very low cost. So it's hard to really measure that size, or size scale drives low cost, obviously, that hasn't benefited the consumer. I think the issue here is not going to be traditional antitrust or anti-competitiveness. I think the issue is going to be market influence, not dominance, right? Now, that's a hard, I think, I'm not a lawyer, but you are, but a hard definition to really prove.
But one of the things that is being alleged here by some is that when you're really dominant in one place, like, for example, Apple with the App Store is really quite strong, Google with search, Amazon with acquisition, that it's very hard not to sort of put your thumb on the scale when they're ancillary businesses and favor your business over other business. What about that? Wasn't that sort of the Microsoft argument?
Well, fundamentally, I mean, you go through, it's like a tie-in sale. Go back to this. You would say that it's a connected tie-in sale. Yes, and that is a legal issue if they truly are doing that. Are they putting their thumb on the scales? Are they really using algorithms to their advantage? That will be, we'll see as that plays out. I don't have any facts one way or the other. My guess is these sophisticated, mature companies like Apple would be very cautious in doing things like that. The younger companies, they'll grow through this and they'll learn, like we learned at IBM, because we got sued on all these issues. Bundling is an issue, we got sued. Antitrust, we got sued. So as the Watsons, the founders, migrated to maybe professional management, we transitioned the company from the growth strategy, the entrepreneur driving phenomenal growth, to more of one that you'd view as a more mature company at that point in time.
And what about for the really big companies, such as some of these mega tech companies are in their acquisition strategy? Can it be anti-competitive? Because there are allegations about things like Snapchat, things like Instagram, that essentially they suppress competition that otherwise would be a competitor to them.
I don't think so. Here's why I don't think so. If you go through when those acquisitions were done, they were in their growth phase. So if you're in the growth phase and you're management, you're trying to scale and grow this company to size, that's where your focus is strategically. You're not defending your base. That would occur, I mean, when you become 100 years old and your growth slows and now you have more of I'll call it a stable business model versus a high growth model, you might at least look at those sorts of options. I just believe those companies were in the growth phase. They were looking for areas to expand growth. In the Facebook example you've mentioned, I mean, the more users they have, it's a bigger base for their advertising models. Also true for Google, it's a bigger base for their advertising models. I just believe that the strategy of the company then was grow, 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 grow. Now, I mean, we'll see 20, 30 years from now if that behavior would continue to exist because, as you know, the expectations of Wall Street are going to change as these companies will mature and stabilize.
That was part of my interview with former IBM CEO Sam Palmisano. You can catch more coming up on Wall Street Week. That's on Friday at 6 p.m. Eastern Time. Meantime, the second hour of Balance of Power on radio, we're going to be talking with Neil Bradley of the U.S. Chamber of Commerce about that Republican proposal for fiscal stimulus. What is in it? What needs to be put in it? That's coming up in the second hour of Balance of Power on radio, and this is Bloomberg.